Hello again, everybody. It's Harry Boxer, the Technical Trader. It's Tuesday, September the 25th. At the techtrader.com, these are the charts of the day. And boy, was it an ugly day on Wall Street. And as a result, I'm going to examine the short side. We have quite a few ideas, but there's about 15 of them from my box of shorts list that look particularly ugly. Excuse me. Abercrombie and Fitch, A&F. Now you can see the triple top, the breakdown, the large wedge over several weeks that broke down again. We've had two sharp legs down and two large wedges formed. This one looks like it's breaking again. It's conceivable the stock could drop 10 points from here. We'll see. Up next is Big Lots. Big Lots is looking pretty ugly these days. By the way, these are two-day charts. You get in some more time frames. You can see that the big gap down led to this, which led to a test of resistance, a sharp drop on earnings. A big bear wedge formed, and then today dropping $1.28 or 4.1%. This one is in danger of falling apart, folks. This has a long line of support that goes back 3 years. And if they break that, they could bring the stock into low to mid 20s here. So be careful on this one on the long side, that's for sure. SIVA, been an ugly trend since it rolled over here, broke that line, spiked down with a break, and then formed a large wedge. The last few days, we've seen the breakdown from the top of this channel as I've redrawn it, and looks like we're testing the lows here. Step back a little bit, you can see that a big declining channel is formed here, and first test would be 13.5. Second move could take us down to 11.5 or thereabout. Recent swing trade on the short side, CNW, which rebounded a little bit yesterday after cracking down, dropped back 71 cents today. And it's right at the lows for the last 9 months. So we break here, we should see 25, maybe even as low as 23.5 short term. Carbon ceramics been in an ugly trend for a long time now, and ever since it reached in July of last year as high as 183, it subsequently has dropped by 2/3 and then bounced and formed the bear wedge, and that was all it could do. So you can see how it's dropped, broken the pattern, and retesting the lows here, but we may very well see this in the mid-50s short term. Same, let's call it 57. Coinstar. Well, I think that both Coinstar and Netflix have very negative long-term implications. We'll see. In any case, after double topping, coming down hard and bouncing off the major trend channel, and then forming a wedge here, you can see how the last few days it cracked. I'm looking for a test of 38.5 short term. DBD, after the run up, the topping pattern, the breakdown, and then a 1, 2, 3 wave corrective move that reached the top of the channel here, the stock appears to be about to break and roll over. What I'm looking for is a rollover and a test of the bottom of the channel somewhere around 29.30. Deckers continues to be a total disaster and has been coming down hard since it traded at near 119 back in November of last year. Subsequently, it dropped from 119 down all the way down to 35. Today closing at 34.99. Not far off the low for the last few years. It's the lowest level reached since early 2010, so 2.5 years. More than that, almost 2 3/4 years. Some minor support about 29.30 zone. That may be the next test. That's what I'll be looking for. But certainly, extremely negative chart and with no signs of a turnaround. Although it is short-term oversold, it may continue down a little bit. Forward air, we spotted that today when it cracked with a breakaway gap to the downside, breaking the 50 and the rising trend line and moving down towards the key lateral price support just beneath here around 30. If that's broken, look for a run into the 26.7 zone perhaps. INT's been in a negative pattern ever since it reached near 50, 49.15 back at the in mid-February. Came down hard, formed the wedge, came down hard, formed the wedge, came down hard, formed the flag, and now it's broken down as well. You can see how it's rolling over nearly every day. I'm looking for a test of this 31, 32 zone short term. LECL funding may be rolling over. As you can see, after hesitating here and snapping back, it did roll over here bounced and it's broken. At least today it appears to have been broken. Now, the spike low at 38.83 back on July 30th, just about tested today at 38.98. Stock closed at 38.99, a penny off the low. It could very well gap down and fall hard the next day or two to get it down towards my 35, 36.5 zone initial target. Stepping back and looking at the Verifone, you see a huge multi-year run-up. Big move down, and then another big move up. But this sharp break broke the back of this trend. And this rising channel here to test resistance. Rolled over, bounced, rolled over to test support, bounced from the wedge. Closed at the low for the day and a low, and going away at the low for the entire move here on support. And if we crack now, we could see this roll and roll hard into the mid-20s. Raven recently broke a major rising channel and then snapped back in this rising wedge. May be rolling over here, as you can see, as each day the highs, it goes up in the morning and closes at the low for the day. That's a very negative pattern. Wouldn't be surprised to see the stock test the 28 level, but if it cracks it, I'm looking for a move down towards 24.5, 25. True Religion finally gave way today, as this platform here for the last 2.5 weeks has held. Finally today, it dropped 73 cents and closed under support and may be falling away now and get down to my target at 19. And lastly, Zoomies, which had rolled over from the top, cracked here, formed the wedge, broke again, bounced, and then rolled over hard the last 2 days, closing the low for the day each day. My only problem is that stock is now at the bottom of the channel and near lateral support. If it doesn't hold here, look for a test of that line just below here and perhaps even a fall away, fall into the high teens. That's it for today. Lots of ideas on the short side. This market is dangerous, folks. Take it easy.